Today on Block Drops, we have Circle Payments Network, the BIS project Meridian, a Korean stablecoin initiative, and much more. I'm your host, Mauricio Magaldi, and this is Block Drops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption and are meant for educational purposes only. In the first drop today, we're commenting on the new announcement by Circle. They announced their Circle Payments Network. They're calling it a new standard for global money movement. And according to the announcement, this will be available on Ethereum and EVM compatible blockchains, as well as Solana. And basically, this is a marketplace for sender and receiving banks to on-ramp and off-ramp fiat to stablecoin, primarily USDC and EURC, and moving money around. So it's almost like a combination between what Swift does in terms of messaging and what the banks do in terms of moving the money around. And it does replace or gets into the same process space in which Nostro and Vostro accounts play a part when sending money around the world. Nostro and Vostro are concepts mostly from trade finance, where the receiving bank has an account on the sending bank and helps with managing liquidity on both ends of the international money movement. And there's a very interesting white paper published with the announcement. They share the vision, what are the primary use cases that they are supporting, the key stakeholders, the roles of the stakeholders. But the part that really caught my eye was the governance. So this will be operated and managed by a Circle subsidiary, but they are operating under the concept of having these members, stakeholders, and other service providers to actually participate in the governance. So the protocol seems to be somewhat permissioned because it's available to duly licensed financial institutions only. They have mandates on AML and compliance and travel rule, and will have ongoing audits of many kinds, and also provide oversight to regulators around the world. So a good and interesting development on the Circle end as they try to capture even more of the headspace on stablecoins, and have been doing this in spades, especially in the regulated environment since their MiCA license. So looking forward to see the first implementations and what problems they'll really solve. In an interesting development, this is the second week in a row where we will comment on a project led by the BIS, the Bank for International Settlements. Their innovation hubs from London and Europe announced that they completed a joint DLT project. DLT sounds really wrong in my mind. It is a cross-border payment process using the payment versus payment, the PVP, part of Project Meridian, and involving England, France, Germany, and Italy and their central banks. The goal was to trade the sterling pound versus the euro using a DLT-enabled platform on one side and a real-time gross settlement system on the other side, the RTGS, which is not based on a blockchain. The blockchain side used an EVM-compatible blockchain, and the goal was to exemplify how a non-DLT and a DLT systems could interoperate by earmarking the escrowing of the funds waiting for an event that would demonstrate that the transaction was completed on one side to trigger on the other side, ultimately leading to the liquidation and the settlement being automated in both ends, triggering the payment from one side to the other. PVP is when you do an FX trade, when a currency is paid on one end, and then it triggers the payment on the other. So this is obviously something that would drastically reduce the risks on that type of transaction. So this is all part of the BIS attempt to prove that in large scales, blockchain-based systems can work with legacy non-blockchain systems. And in my mind, I think I applaud this effort from the BIS because it is a transitional period. These legacy systems will continue to exist, and the new blockchain-based systems will bring in innovation and automation and speed and maybe better cost and better transparency. But between one and the other, there will be a transitory period in which all the things that work today need to continue to function as these systems transition to the new paradigm. So, yes, it's 2 weeks in a row that we applaud the BIS. If it seems that the Blockdrops is becoming a stablecoin only podcast, this is my fault because I have a background in financial services, and stablecoins do seem to be the killer case for crypto adoption. And it's very interesting what's happening all around the world. In this particular drop, the banks in Korea, not the government, the banks in Korea have formed a joint venture, a consortium of sorts, that will operate a pilot for Korean stablecoins. Noted, Korea doesn't have stablecoin regulations, but the banks are pushing the envelope and forcing that conversation with the regulator, as you would expect from any serious innovator. And this is big because these are the names of the banks that are involved: KB Kookmin, Shinhan, Woori, NH Nonghyop, IBK Industrial, Shuyip, I hope I'm saying this right, the Korea Financial and Telecommunications Clearing Institute. The only large bank in Korea that has not subscribed to this joint venture yet is Hana Bank. And interesting, in the statement of the announcement of this association, one official said, and here I quote, "I understand that regulatory authorities are closely examining the institutionalization of stablecoins. We will create a trustworthy stablecoin ecosystem through a collaboration with banks and support the revitalization of the domestic blockchain industry based on this," end quote. So, in practice, what the banks are expecting this to be is not only to face the over-dollarization of stablecoins. We're looking into over 99% of all volume of stablecoins being pegged to the dollar, to the U.S. Treasury, but also to revitalize the blockchain industry in the country. This, to me, is probably the best part of this announcement, because we know how many more other use cases are there for blockchains in a variety of industries. But the fact that the Korean banks are seeing the stable coins as a real anchor to bring in more use cases back on the blockchain to revitalize, as they say on the announcement, is a significant progress and a very interesting angle on how countries and jurisdictions might want to actually foster innovation. It's not just about the regulation, it's also about what are the enablers, and the banks in Korea are seeing stablecoins as clear enablers for the blockchain industry to flourish. And in a week packed full of news, here is more. Citi published a new report on digital dollars called Banks and Public Sector Drive Blockchain Adoption. M0, the decentralized stablecoin network, added Brale, their first US regulated issuer. Nuclea launched a secondary market for tokenized consortium shares in Brazil. The US Federal Reserve updated their guidance on crypto banks, but still published the previous guidance from last year. Stripe and Bridge are finally ready to start testing their new stablecoin service for non-UK, non-US, and non-EU markets. And yours truly is featured on a new interview at Beincrypto by our dear friend Aline Fernandes. Check it out. Catch us online. We're on Instagram at BlockdropsPodcast, on Twitter at BlockdropsPod or 0x Mauricio. We're on Lens at Blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the Blockdrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out today to the people who share the links you will find in the episode notes: Nikhil Chandhok, David Cunningham, Leandro Pereira, Felipe Cabral, Caitlin Long, and Aline Fernandes. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird, LFJ.